What did we learn this week? First, shoppers have been more cautious, focused on trading down and buying lower priced items. Walmart won big, while the more discretionary leaning Target saw sales slump.
Second, the rates debate is, alive and well. The 10-year Treasury yield saw its highest close since 2008 after Wednesday's Fed minutes suggested officials are still focused on containing inflation.
And finally, economic woes abound in China. The world's second largest economy is still struggling to recover post-pandemic. China's central bank cutting key interest rates on disappointing economic data, and new fears of a looming property crisis there from mega developers Country Garden and, I guess, the ghost of Evergrande, you could say, after it filed for Chapter 15 bankruptcy protection in the U.S. That is not helping matters either. So a pretty eventful week for a summer August week, right? But I think whether you look at any of these three factors, they're not just a 1 week story, right? Whether you're talking about the consumer, whether you're talking about inflation, the Fed and the trajectory for bond yields, or whether you're talking about China, these themes are gonna be lasting.
Yeah, three types of woes in different area codes here. As we think about specifically the consumer, though, and what we were hearing from some of the larger retailers over the course of this week, many of them trying to glean as best as they could into the back-to-school shopping season and see what that sets up in terms of a demand profile for consumers and the propensity to spend going into the holiday season. And that really gets us to the crux of some of the forecasts that we heard. And Target really jumped out. And even though you did see some interesting stock price movement in reaction to the earnings where they did lower that guidance, I think critically here, Walmart may have saved some of that tenor at least. And it really is about where the consumer is going to be spending, where they're looking for discounts. We spoke with Tanger Outlet's CEO as well, and he laid out a picture saying consumers are clearly looking for sales and discounts right now. So it's a matter of which brands are being able to not just manage inventory the best in this retail environment, but also make sure that the pricing strategy is such that consumers will continue to feel comfortable spending their dollars, those discretionary dollars, where they had shown some weakness coming into this year, especially in that apparel and footwear category too.
You know, I keep coming back to the comment that Simeon Siegel of BMO made to us, where he talked about that because of normalization in inventory right now and more of a normalization of the environment, it's going to be more about management execution on the part of retailers. So that begs the question of, is Target a macro issue of people really looking to save money? Or is it a Target issue? And I don't think we have the answer to that question yet, but we do have a few other clues. Firstly, we did have Walmart saying that there is a little bit of purchasing of big ticket items coming back in, a little bit, even though Home Depot said the opposite. We got retail sales this week as well, and those numbers were quite strong, particularly even online, yes, but even for things like apparel. So how is that going to play out beyond a Target, which has seen in the past strengthen its apparel business? How's that going to play out for the specialty retailers when we start to hear from the Gaps of the world? Now, Gap has its own issues, but how is that going to start to play out when we hear from more of those companies? So there's sort of all of these hints and still questions about, it's not that people are pulling back on their spending. I think the retail sales number made that clear. It's still that they are spending on certain things. Are they spending more on travel and therefore will only buy clothes on sale, for example? So, you know, I think we're still getting a bigger picture for all of this.
Or only buy t-shirts that say I love New York on them, who knows? But for the Fed and how they weigh all of this data, it's been amazing to see even in the minutes and how they were discussing the state of the consumer coming into their last meeting and what that sets up for September and November. And a lot of the signs pointing towards a potential November hike. And even if we do have a muted decision in September here, the way that the Fed has been talking about this as shown through their meeting minutes over the course of this week that certainly had some price action in the bond market and the yields, particularly saying that consumer price inflation as measured by the 12-month percent change in the price index for PCE remained elevated in May. Available information suggested that inflation declined but remained elevated in June. And so since then, we've also had July's reading, and now we're thinking about where the Fed will continue to need to dampen down on, of course, that chart right there, that larger trend, the inflation rate and their target. Remember, folks, 2% is what they're going to be looking for here. And so will the Fed be comfortable with us remaining around this 3% ballpark, at least for the time being, while they wait to see if their policy that is enacted has fully been digested, and at what point will they believe it's fully digested?
One thing that maybe will get it a little bit closer to being digested is we saw an increase in mortgage rates and 30-year mortgage rates this week, and so that's something that eventually we could see weigh on consumer spending. Especially, we got a little bit of a warning perhaps from Canada in the form of Doug McMillon, the CEO of Walmart, making commentary about Canadian customers being a little more cautious. Apparently, the mortgage market there is more short-term mortgages than it is here in the U.S., and so then they are starting to feel the pinch of higher rates a little more. That's moving its way through the system a little more quickly than it is here. I thought that was a really interesting comment.
To that, I say, hey, all right.